So here, in our last session, we spoke about investing, where we looked at what is investing and the importance of investing. And we also looked at the options that are available for one to invest. In our today's session, we are going to talk about investing in government securities. So I've got a question for you. Is it possible for government to raise funds by borrowing from the public rather than getting a loan from the bank? Yes, it is very much possible. Basically, government securities, these are debt instruments that are issued by government through the central bank. In Malawi, they are issued through the Reserve Bank of Malawi. So, put in simpler terms, this is whereby the government borrows from the public, and as investors, we lend government the money, and in return, we get a return on our investment. There are different types of government securities. We've got what we call Treasury Bills, and we also have what we call Treasury Notes. We usually get a lot of questions around this area to say, what is the difference between the Treasury Bills and the Treasury Notes? Let's start about the Treasury Bills. Treasury Bills are short-term in nature. If one wants to invest in a Treasury Bill, which means that they have got a short-term objective. Treasury Bills, they are in different tenors. We can talk about 91 days, which is 3 months. We can talk about 182 days, which is 6 months. We can talk about the maximum being 364 days, which is 1 year. So based on the investment objective, an investor can choose the tenor that they want to invest in. And you know what? The minimum investment for a Treasury Bill is just 10,000 kwacha. You see, everyone can invest in Treasury Bills. Now, let's talk about investing in Treasury Notes. These now are long-term in nature. We are looking at different tenors spanning from 2 years to a maximum of 10 years. The minimum being 1 million. There is a lot of terminology that is used when dealing with Treasury Notes. Present value. This is the value that the investor needs to pay in order to get the Treasury Note. Face value. This is the value that the investor gets upon the maturity of the investment. We talk about the yield to maturity. This is the return on investment. Let's talk about the coupons. This one is the interesting one. For those that are familiar with investing in shares, you know that whenever you invest in shares, you get what we call dividends. So when you have invested in a Treasury Note, you get what we call coupons. Basically, this one is the interest based on the face value that you are going to get on maturity. And in Malawi, the coupons are paid semi-annually. Every 6 months, an investor gets to get their coupons. And the last one that we can talk about is the maturity tenor. A Treasury Note, it's in different tenors. We talk about 2 years, we talk about 3 years, we talk about 5 years, we talk about 7 years, the maximum being 10 years. So an investor gets to choose which tenor they are comfortable with based on their investment objectives. Now, let's talk about the benefits of investing in Treasury Notes. Predictable cash flows. As earlier highlighted, that when you have invested in a Treasury Note, you get what we call coupons. So you can actually plan to say, at this point in date, I'll get my coupon. And it's certain you will get your coupon at an appointed time. So you can actually plan for whatever that you want to do. Well, we usually advise our clients to say it is recommended to reinvest those coupons in order to grow your portfolio. The other benefit of investing in Treasury Notes is that you can use that Treasury Note as security if you want to get a loan from the bank. The other one, it acts as a form of diversification. It is very important to diversify your risk when we are talking about investment. Earlier on, we spoke about investing in shares, in business, and also property. So investing in Treasury Notes is also another way of diversifying your investments. Let us look at the risks associated with investing in Treasury Notes. The key risk is the changes in the yield. So it is very important for an investor to consult professionals before investing in a treasury note so that they can understand the factors that affect the yield. Having looked at all these elements of investing in government securities, we can actually see that anyone actually can invest in a treasury note. So in our next session, we are going to look now at how one can get started in investing in government securities. Thank you.